Gold investing has leapt as Trump 2.0 delivers exactly the policy chaos which the new president promised in the US election, writes Adrian Ash at world-leading precious metals marketplace BullionVault. The safe haven's latest surge to new record prices is seeing sentiment, demand, and new accounts openings jump to multi-year highs on BullionVault, taking the value of securely stored gold owned by investors using our 24/7 service above $4 billion for the first time. With the number of new investors rising last month to the highest count since May 2021, the total number of people starting or adding to their gold holdings on BullionVault rose 33.6% from January's figure, while the number of people selling gold across the month fell 17% despite gold's new record prices offering fresh profits. Together, that raised the Gold Investor Index by 3.6 points, the strongest rise in 10 months, to 56.3, its highest reading since October 2022. The Gold Investor Index tracks the balance of gold buyers versus sellers each month, starting in 2009. It set a decade peak of 65.9 in March 2020 when the COVID pandemic went global, and it fell to a record low of 47.5 last March as gold's rising price spurred heavy profit-taking by existing owners. Any reading above 50.0 would signal that the number of buyers perfectly matched the number of sellers across the month. What's spurring this jump? Western investors are joining emerging market central banks in buying gold as an all-weather hedge. Traders in all markets are now watching Truth Social more closely than monetary policy. Volatility is also helping. Gold prices swung around 6% in all major currencies last month, offering longer-term holders the chance to book a profit before buying the dip alongside new investors. Priced in the dollar, gold set 10 new record high prices in February, matching the count of September 2011, peak of the safe haven metals global financial crisis bull market, with the most since October 1978's record monthly count of 12. In Euro and UK pound terms, gold also continued its run of new all-time highs, extending 2024's record count of new gold price highs in terms of those currencies. BullionVault finds 9 in 10 its 110,000 customers in Western Europe and North America. From here in Hammersmith, West London, our regular investor surveys say that BullionVault users typically hold 4/5 of their investable wealth in other assets besides precious metals. New Year 2025 survey showed that Geopolitics now tops the list of gold price drivers, overtaking monetary policy for the first time since Russia's all-out invasion of Ukraine began in 2022. New users funding their account last month to buy bullion for the first time rose 22.4% from January's count and jumped 62.5% from its 12-month average to the biggest figure since May 2021. That was led by the UK, up 80.9% from its 12-month average to the most since March 2021, Germany, up 89.3% to the most since March 2022, and the USA, up 137.4% to the most since April 2023. So the upturn in European gold buyers, which we've seen and reported since the eve of the US election in October, continues spreading to US investors, but from a lower base historically. Also note that, worldwide, this jump in bullion demand remains far from a gold rush right now. While February brought the most first-time buyers to BullionVault in almost 4 years, that number was less than half the peak of either the COVID crisis in August 2020 or the global financial crisis in September 2011, when gold's then record prices set what proved to be a longer-term top. By weight in February, and net of customer profit-taking, BullionVault's 24/7 marketplace witnessed the strongest gold investor demand since June 2023 at 0.2 tons. More than reversing January's net outflow, that demand saw the total quantity of BullionVault clients' gold, all securely stored and insured in specialist warehouses in each user's choice of London, New York, Singapore, Toronto, or Zurich, rise to a 3-month high above 44.1 tons. Up 0.4% from January's 4.5-year low, client gold holdings increased 1.1% to the 9th new all-time record of the past 12 months, rising above $4 billion for the first time.